Boom, we are live, ladies and gentlemen. Thanks for joining us today. It's going to be a quick little market update. Take a look at Bitcoin, the S&P 500, and Ethereum. I'll be back tomorrow with some more video updates. But for now, let's just start with Bitcoin. Bitcoin jumped back up from the $66,000 mark all the way up to $70,000 this morning. Huge change. It's a very volatile area. But what I have drawn on the screen right now is the start of the previous bull market, and where I believe the start of this bull market was as well. Now, we've gone over this before. It's a mixture of Wyckoff and Jesse Livermore's widening megaphone pattern. The widening megaphone pattern almost always starts its point one at the spring of the accumulation range, and then moves to point seven before breaking out kind of astronomically. And right now what I want you to do is look at both of these charts, kind of the previous bull market cycle start and this bull market cycle start. So once we leave 0.6 and 7, we move outside of the top of this range is where the majority of the climactic or euphoric starts of the market move. Now, from the previous market cycle's top of the widening megaphone pattern, we had a 200% growth. Let's assume that it does 80% of that today, just as a kind of a market cycle run up from 0.6 and 7 here. Let's go to 140%. That would put us around $120,000 for Bitcoin. I think that's where we're going to get to. The stock to flow market last time totally overestimated. It assumed we'd be going to $100,000 plus, and we never got even close to that. Or I guess $70,000 is close to that, but 30% less is actually quite a bit. Here, I expect there's a law of diminishing returns for Bitcoin. I also suspect that over time, if Bitcoin is to fulfill its kind of legacy as the new money of our generation and the younger generations, that Bitcoin will effectively become a stable coin. During the collapse of all of the other currencies, that most of the mass of those will end up in Bitcoin. I still stand by that thesis. Although there are some things in the long term, I think, that might contradict that, like the ability to figure out infinite energy. It would be so deflationary. It would basically make Bitcoin useless. But we're not there yet. I don't expect us to be there tomorrow. So somewhere between $120,000 looks about right to me, $130,000. And based off where we are right now, this is still bullish. There's no reason to think we're in the bearish modality yet. These widening megaphone patterns are pretty reliable. We've used them in the past too. This is a little bit of a messy chart here, but if we go back to Ethereum in 2020, this is actually the same chart we had drawn up. You can actually go back and watch all of my videos from that time. Notice again, the spring starts at 0.1, 2, 3, 4, 5, 6, 7, and then the breakout. And basically, as soon as we left the widening megaphone pattern is where all the climactic fun took place. So any entrance in the megaphone, even though there was a 260, 300% growth for Ethereum, there's still a massive amount of upside on that for another 500% growth. We're not seeing the same thing here with Ethereum today, which would be a widening megaphone pattern, maybe something like this. You could make an argument, but I see just a rising channel. These are actually fairly similar, although the widening megaphone pattern, I think, is more confident in the growth here. Although I do think Ethereum is going to see new all-time highs in the future. And I suspect right now what we're witnessing is the SOS, and this was the backup phase that we saw before the breakout for Ethereum here. And then I actually suspect that we're going to see some type of horizontal trading range here for Ethereum as well, which is effectively what we're in right now. Now, it could be a short-lived horizontal trading range. We saw this with Bitcoin. Even with Ethereum here, this was not a very good trading range. It just kept kind of edging itself closer and closer to the top of the trading range before breaking out. But we are in the finality of the backup pattern here for this particular trading range. So nothing has changed in the sentiment, which is important to note. The other reason being is that the S&P 500 moved like 2% today, moving into new all-time highs. I saw Alessio Rastani made a video where he exited all of the he's like, I exited everything here. Now, I don't know why you'd want to do that. There is a ton of data that pointed pretty specifically to this being another breakout pattern. If you're watching my videos, There was one right that happened in Bitcoin, TON, and a few others where we had this falling range, a breakout, and then a move to the top. Now, what's interesting is that if we actually go and look at the closer time frame to where I was comparing this with Bitcoin, let's go in here. I don't want to make this chart too messy, but I'll show you where we were. A very similar pattern was taking place here for Bitcoin, which was this parallel falling channel like this. Notice we had a breakout and then we came back down to test. This looks like a spring to me. The fact that we tested the middle of this range and then continued up, again, I think is very similar to with what the S&P 500 is and where we're going, because it's not just the S&P 500 here. I'm going to jump into Ethereum. Let's scroll down. Everything's in the green today, on lower than expected inflation data, although that's all a giant scam. Anyways, the NASDAQ also hit new all-time highs. So you have two of the largest markets in the world hitting new all-time highs. I think it's important, again, to remember that the reason why everything is going so high is because the dollar is losing value. You have many of the G7 countries already lowering interest rates. Canada is one of them. The rest will probably follow. I think the United States, in all of these conversations, their dollar will be the last to make those adjustments. They will also be the last dollar to collapse. But if you compare Bitcoin to many other currencies around the world, it is already in new all-time highs. Although that's not the same for my local currency of Costa Rica, which is apparently 30% stronger than the dollar somehow. I have no idea how that shit works, but instead of getting weaker, the Costa Rican colone got stronger and is actually at even lower highs than the dollar for Bitcoin. But so you don't see a unanimous story everywhere across the board of simply gaining value. You're going to have these nation states kind of move around and change, although I suspect that all of them will start to eventually lower interest rates and then eventually start printing again. There is no other way around this. If you look back through history, all the governments do the exact same thing. They go into fear and panic. People start to get upset. And then to quell that, they print money like it's heroin to feed the addicts and keep them happy. We used to have riots and revolutions around a 2% tax. Meanwhile, they're going to increase tax rates by 40% and nobody gives a fuck. And that's because they just keep printing money and your shower is still hot. If you lost your hot shower and your morning coffee, there's no way people would be this complacent. If actually coffee is just for fun, let's see how coffee is doing. It's been one of these. Okay, here. So just so you can see, since 2023 here, coffee had a massive 200 to 300% run up, and this is a multi-decade long accumulation channel. Like there's basically. Again, it didn't leave the accumulation channel at all here for coffee and then, for cocoa. And then all of a sudden this is cocoa, not coffee. Similar though. All of a sudden a huge move up, 200% after like a 10-year accumulation pattern that had been taking place. So if people were to lose their coffee or their hot water and shower in the morning, I think you'd see revolution. But for now, they're basically able to lie and manipulate. The stock market is going to continue up. I stand by that thesis. I stand by the thesis that eventually they're going to just start printing capital because there's pretty much nothing else that they can do. That all these stories are going to end up the same. And really the majority right now of what they're trying to accomplish is to keep everybody high on that monetary heroin so there's no civil unrest until they want it to be that way, in which case they'll probably just pull the rug out from underneath you and any of the stocks you have will become basically worthless. This to me, again, when we look at the S&P 500, this reminds me of the saying of you will own nothing and be happy. The retail is not here. They're not going to show up. Retail doesn't have any fucking money right now. There's actually a really interesting kind of sideline topic I'll end with here, which is called the stripper index. Let's not use Facebook or Jacob and Co. Stripper index for how the economy is doing. This is a fascinating little side point. It says the stripper index decoding the economy signals of sex work. This is like a cash front business. I'm sure it would be maybe OnlyFans nowadays. The reason I wanted to bring this up is in the movie The Big Short, one of the data kind of scraping or sleuthing ideas that they did is they went to the strip club and started talking to the strippers about how their business was doing. And the strippers like, yeah, we own like 3 houses and we're paying cash. And now I don't have any cash and the economy's doing worse. You can often tell from some of these off the books businesses how the economy is doing because they're largely cash-based businesses. I think OnlyFans, again, probably the OnlyFans index now, the OFI, someone should probably make that. Because that's where excess capital is going. Most of retail, I don't think, has a lot of money to spend right now. I don't think retail is the one that is pumping these markets. We might not see retail show up the way we ever have, even if they lower interest rates. Now, if they lower interest rates enough. Now, one of the things I do want to point out, though, here with the S&P 500 is this diminishing volume supply, but also this massive signature that we had that was instantly gobbled up. So even though we have massive amounts of sell that came in for a spring on the S&P 500, it was instantly gobbled up and turned around. Like I said, I think we're going to go to around 571 points for the S&P 500 before we see any real contention for downside, and that could mean new all-time highs for pretty much every asset that we're looking at. You have to, again, remember that if you move 2 to 3% in the S&P 500, you're talking about hundreds of billions of motherfucking dollars. It's not a small market, nor is it retail right now. Anyway, sentiment has not changed. We are still in the bull market, and based off the long-term data here, especially compared to the previous market cycles, I think this is a great way to look at it. We've just left the widening megaphone pattern, which is also probably telling us where our future bottom will be. If you run it out here, basically 0.6 and 0.7 was the bottom to begin, the bottom in the future from the previous market. So that would maybe put us around $50,000 for the potential bottom after this high. So this is also, again, note where the majority of the whale accumulation in the ETF started to take place. So if they run the market up and they drop it, they'll probably drop it back down to their original entry point. So we've seen this, again, multiple times before. And I'll just kind of end this off with Ethereum, I guess, just to kind of continue to explain this thought process. Wow, look at that. This is another Ethereum chart I've had drawn up for, this is almost 4 or 5 years. I haven't touched this, where you can see the importance of these long-term linear regression lines that we had drawn up. Now they're not perfect because I'm just kind of dragging them forward here at will, but you can see we've hit the peak of the previous regression line. Once we break outside of this, and also, again, I suspect that we're gonna build a range within here for the, Ethereum. But more importantly, what I wanted to do is, again, look at this here. Same thing with Ethereum, basically from where we left to 0.7, pretty damn close to the bottom of where we ended up for Ethereum to begin with. So the bottom for Bitcoin could be somewhere around $50,000 to $60,000 here in the future. So I think no matter what, these are still considered great points of entry, because with all the whale accumulation here with the ETFs and the way these widening megaphone patterns have worked in the past on multiple assets, we usually come all the way back down to the middle of the widening megaphone pattern. So here's the bottom of the future. So we're and I expect an all-time high of maybe around 120,000. It could go much higher. Again, if you look back at my very first YouTube video, I talk about Bitcoin going to $6 million. And that's in the case of massive inflation and deflation. We're dealing with something right now, especially with how quick AI is advancing and robots are advancing. Most people won't have their jobs. There's a likelihood that the governments are going to try to introduce a universal basic income of some kind, and it probably won't be a small amount of money. It'll probably be, oh, if you have X, Y, or Z, we're going to give you a significant chunk of capital, because robots are going to take everybody's job. Like, think about one of the more stupid people you know, and then remember, most people are like 20 to 30% stupider than that. Not because they're actually that dumb, but because they just follow the masses. There's a wonderful experiment called the Ash experiment, that goes into social conformity, and people go against their best interests, even though they recognize that something is wrong within the data. They will just simply follow suit. So they're not stupid because they're stupid. They're stupid because they just follow the masses and go against their best interests. And this is a really difficult thing you think most people would have their best interest in mind. Anyways, look up the Ash experiment. It's a fantastic thought process to understand to yourself how difficult it is to be that person who stands out and go, no, everybody's wrong. And it's only maybe about 10% of the population who can do that. If you're here already, you're part of the slim 10 to 20% of the population who can probably do that. The majority of Bitcoin holders probably aren't vaccinated. It's because it takes a very strong mind and will to stand out against the crowd when everybody else is doing something that appears totally fucking retarded. Anyways, Tio the Arcane Bear. I'm going to make a video. I made a tweet this morning, and I got so much positive feedback from you guys. Just talking about how I wasn't feeling great, and that sometimes you can just feel like shit, and that's okay. And it doesn't have to do with anything. Like, my life is pretty awesome. I live a great life. It's been full of music and adventure and travel and excitement. You know, so there's no reason for me to feel bad, but sometimes we just do. So I shared that last night, and I got a ton of great comments and support from you guys, really highlighting that one of the most valuable things in the crypto community is not the assets itself, but it's each one of you showing up. So thank you for that. I really appreciate it. It helped inspire me to see that, first off, I'm not the only one who might feel shitty sometimes. It's good to share. It's good to share when we're feeling good. It's good to share when we're feeling bad. Just go out of your way to make the distinction of, hey, I think B and C are different lengths here. Anyways, again, check out the Ash experiments. Tio the Arcane Bear, we're signing off. See you guys again in the next episode.